All right, welcome to week 33. It is Monday, the 15th of August, so it's a little bit of an inflation and minutes-themed week. We do have RBA minutes out due Tuesday. I think the key inflection point will be the FOMC minutes, which will come out on Wednesday, and of course, ECB minutes on Thursday. And on sticking with central banks, we also have a Bank Indonesia rate decision on Friday, where the market's actually expecting a 25 basis point cut. I think the other kind of key thing in regards to tactical positioning, you probably see the dollar being supported to at least neutral, so not seeing the continued sell-off that we had last week where the DXY was down about 50 basis points. And I think, the dollar should be relatively well supported at least until we get through the FOMC minutes, right? I personally think the minutes a little bit defunct given the strong consecutive kind of job growth figures that we've gotten, but you never know in regards to kind of the market and the interpretation there. I think any interpretation is probably more skewed towards a less dovish, more hawkish kind of Fed, but we'll have to wait and see how things happen. So I do continue to like, the heavy kind of yield FX kind of names such as Aussie and your Kiwis, but I think there'll potentially be better entry points as we get kind of closer to the FOMC. And on the other side, continue to like oil. We're just shy of the 45 handle that we were basically flagging from last week. I still think it looks constructive, but what I definitely do is either take profits from the entry point from last week, or at the very least move up the stop, so at least they have a 44 handle. And I think on the other things, metals looking a little bit mixed, especially the likes of kind of copper, but the net tactical view is volatility still heading lower. And I still think that equities heading higher. We did see an outperformance on the European side, but I believe you'll also see that coming through in the U.S. I think we need a much bigger move in the U.S. before this kind of risk-on peters away. And I think the interesting thing is when you look at Europe, you actually will see stuff like the DAX is up 16% since the June lows. It's actually up from the pre-Brexit levels, and things like the CAC and Euro stocks are similarly there inclined. And at some point, with premium volatility being so cheap, you'd have to think you want to start thinking about some downside, maybe picking up DAX puts towards the end of the year, because there's still a lot of event risk left on the table. And with that, let me wish everyone a brilliant week up ahead.